this is Matt from InvestiQuant. Today is Thursday, November 11, 2021. Before I get started, I wanted to say thank you to all the veterans and active duty military out there for your service. We appreciate all that you have done to make our country a better place. If you're not familiar with our founders, Scott and Dave, here at InvestiQuant, they are both veterans as well. I've had the privilege of working with those guys who have selflessly laid aside things that are very important to them to serve this country, and I know there's many of you out there who have done the same thing, and I just wanted to say thank you. It is greatly appreciated, all that you have done. All right, let's step into today's daily IQ. We'll be looking at a pattern that took place yesterday that doesn't happen all of that often. It's a pattern from Market Profile where the majority of the day's consolidation activity that took place near the highs of the session, but then it kind of sold off later in the day. So we'll be using something called the point of control, and that is the most traded at price in Market Profile terms for the session. So let me go ahead and set this up and show you how to do it here in Discover. We'll grab all four instruments. The setup's based upon entering the market long at the open of regular trading hours, 9:30 a.m. Eastern Time, exiting at the 4:15 p.m. Eastern Time. If we go to opening filters here, I'm going to add gap up in here since we are lifting in this overnight session. All right, next I'm going to go to the price patterns library. I'm going to say yesterday closed in the bottom half of the daily range. I can grab that from the location, last open and close. I can also grab it from the active today. I think I'll do that right here. Close in bottom half of daily range. I just clicked on it. You can see it goes right there is where it comes from. There's the equal sign next to it. It is added to the test. So that's pretty self-explanatory. Close was in the bottom 50% of the range. The next one's the profile pattern that we're going to be using. And over here in the active today, that's where I'm going to grab it. POC placement. I'm going to go to POC finished in the top 25% of the daily range. That comes from our POC placement category. That means that the price that had the most trading activity taking place at was in the top 25% of the daily range. And if you look at the chart, kind of a short-term chart, you'll be able to see we had consolidation up there around the 4672-ish area in the S&P. And then after consolidating there for a while, ended up rolling over and getting quite a bit of follow through to the downside. But that would be where the point of control is at on the Market Profile chart. All right, next I'm going to go into the indicators library. I'm going to put us in a similar market condition. We have pulled back off of those all-time highs, but we are still in a bullish market environment. So I'm going to say we are below a 10-day simple moving average, but above a 200-day simple moving average. And now I can click View Results. All right, here we go. These are the results based upon entering the market long at 9:30 a.m. Eastern Time, exiting at 4:15 p.m. Eastern Time. When you gap up, and the prior day close was in the bottom half of its intraday range, but the point of control from the Market Profile was in the top 25% of its intraday range. This is taking place below a 10-day simple moving average, but above a 200-day simple moving average. Historically, there are 42 samples of this pattern in the S&P, 32 in the NASDAQ, 37 in the Dow, 27 in the Russell, and that's dating back to 2003. If we look at the win rates on them, S&P coming in, 67% of these have closed above the open following that pattern. For the NASDAQ, it's 66%. For the Dow, it's 59%. For the Russell, it's 59%. So win rates are mostly in agreement there. If we look at the average moves, the average win is larger than the average loss for the NASDAQ and the S&P both. For the Dow, it's pretty similar in size, and the Russell is the only one where the average loss is larger than the average win. But historically speaking, this pattern has been a little bit more favorable towards the bulls following that pattern. So hopefully you found that helpful. Good luck today, and we'll see you next time.